Good morning and welcome to the show. I am Puneet Wadhwa and we have Jim Rogers, Chairman Rogers Holdings, with us on the show today. Good morning, Jim. How are you?
Good morning. I'm delighted, Puneet. I'm a fan. Very good. Thank you.
Let me start by asking you, the problems have again cropped up in US's backyard. High inflation last year, then the developments with Silvergate, Silicon Valley Bank, and Signature Bank. In Europe, we had Credit Suisse too, in trouble recently. What's your development of these? What's your interpretation of these developments across the banking universe? And do you think the problems have been caged?
If you're asking about the problems in the U.S., yes, and we're going to have more. The debt in the U.S. at the government level and at the private level has risen to the highest in world history. So, of course, we're going to have more problems. We had a big problem in 2008 because of too much debt. Oh, Puneet, since 2009, the debt has skyrocketed, not just in the U.S., but everywhere. The U.S. is the leader. So the next time we have a problem, it's going to be horrible.
What about the banking related issues, Jim? Bank, Silvergate, Silicon Valley Bank, Signature Bank.
Well, it's happened throughout history all over the world. When there's a long period of prosperity, banks get excited and get confident, and they think they're smart, and they start making loans that they wouldn't make otherwise. That's what's happening in the U.S. Silicon Valley Bank was very, very excited. They thought they were smart. People in Silicon Valley think that they're very, very smart, and many of them are, but they get carried away. They lower their standards. They think everything is okay. And that has always led to problems all over the world throughout history. And it's happening again. And don't worry, before this is over, we're going to have some horrible economic problems everywhere.
Okay. So comparisons have been drawn of these developments to the Lehman Brothers collapse and the global financial crisis. What's your view here? Are we being too pessimistic?
Well, the U.S. is the largest economy in the world and certainly the largest financial market in the world. So if we start having problems in the U.S., they will snowball everywhere, whether we like it or not. Silicon Valley went bankrupt, that led to another bank in the U.S. having trouble. Well, the next thing you know, Credit Suisse in Switzerland, a very large Swiss bank, is having problems. So all of these things snowball. What happens in one country has an effect in others, maybe not directly, not the same week, but we're all interconnected these days, especially financially. And that's going to lead more and more problems. You should be worried.
So how do you see the US Federal Reserve tackle the inflation ghost now? Do you expect the US Central Bank to go slow on rates or probably take a U-turn and cut rates later this year?
Well, what should be done and what they will do are two different things. The U.S. Central Bank, like most central banks, they're not very smart people. That's why they work for the government. India had a very, very good central banker a few years ago. He's now a professor somewhere, but there are very few good central banks in the world, and there have been very few good central bankers in the world. The American Central Bank, they're all very, very worried. They are starting to think that they have solved the problems of inflation because some prices, oil is down, grains are down, which always happens in any market. So they think they have solved the problems. Maybe they will raise interest rates one more time, a small amount, but for the most part, they think they have solved the problem and that they don't want to cause more economic problems. And so we will see a slowdown in interest rate increases in the U.S. for a while.
Can they take a U-turn and start cutting rates, or probably look at a quantitative push instead of a quantitative tightening? They look at quantitative easing later by the end of 23.
Well, I doubt there'll be quantitative easing, as you put it. There may be less tightening, which will be in effect a form of loosening, if you will. But you're not old enough to remember, but in 1980 and 1970s, we had this problem. Interest rates in the U.S. on short-term treasury bills was 21%. 21% on short-term government paper. That just shows you how bad it can be. The inflation problem is going to be worse this time, so interest rates will have to go very, very high. And not this week, not this month, because Washington doesn't know what to do. But before this is over, we are all going to see very, very high interest rates everywhere, or much, much, much worse inflation. But I would suspect eventually we will see very high interest rates.
Okay. So do you expect the markets to actually correct in 2023?
Well, they already have been correcting to some extent in 2023. Yes, markets always have ups and downs. There's nothing new about that. Yes, before this is over, we will have a serious correction later in 2023. But at some point, the U.S., well, as I said, the central bank is going to stop raising interest rates. Everybody will think things are okay. We'll have a big rally. That will probably be the last big rally for a long time. And it will happen because everybody will think everything is okay now. It's not okay because inflation will come back in a big way, which means that interest rates will go very high, which means that the world economy will have a major, major problem next year or the year after, or later this year.
What are your views on Asian economies and markets, Jim? China and India both.
Well, Indian stock market has been fabulous, as you know. Somebody in India has been doing something right. The Chinese stock market is down because their reaction to the virus was much worse than many other countries in the world. So, I mean, of those two, if I were buying something, I would buy China now instead of India because China's down a lot and India's been a very strong stock market. I don't like to buy things that have been strong. I like to buy things that have been weak.
There was a recent Hindenburg report that highlighted wrongdoings or some activity with a certain Indian group. Are you aware of that? And if you could throw your views on that.
Wait, am I aware of what?
There was a Hindenburg report on Adani Group.
Oh, yeah, of course I'm aware of that. I mean, you cannot be alive in 2023 and not be aware. Of course I'm aware of it. I have not done the homework, the research. I do not know whether the accusations are correct or not. I do know that those people on both sides are very smart people. The Adani Group is very smart. People that I read about in the U.S., I read that they're smart. But I don't know. So I do not know if there's any accuracy or not. I have no position. I am not long or short any of those companies at all. I am watching.
Okay. What are your views on the commodity segment? Crude oil, gold, silver, and of course, agri.
Well, agriculture has been depressed for many years. So agriculture is still a place with lots of opportunities. I mean, agriculture has been terrible. The average age of farmers in America is 58. The average age of farmers in Japan is 66. Agriculture has been horrible in many places in the world. So whenever there's a horrible problem in something, there are usually opportunities. So I find I am looking at agriculture for opportunities. It's a great place. But there are many parts of the Indian economy which could be and will be very successful again in the future. I wish your government would be less interventionist. I wish your government would stay out of the way more. I wish that about all governments. I certainly wish that about the U.S. in a big way. India has been at times in history one of the world's great agricultural nations. You will be again, if the government will get out of the way.
What are your views on crude oil prices, Jim? They slipped below $80 a barrel. Do you think that they will stay there, or is it a temporary blip?
I know that they will not stay there. They will go up and they will go down. I am looking to buy more energy, not today, but eventually, because energy prices have been coming down. And the world's known reserves of oil and natural gas continue to decline. Fracking came along and helped us for a while, but fracking cannot save us for a long time. So there will be opportunities again in energy. I am not buying at the moment, but I am watching because I see the prices coming down. And I know that the world's reserves of oil and gas, known reserves of oil and gas, continue to decline.
What about gold and silver?
Well, I have a little silver right here. I have some gold too. I have been buying gold and silver for decades, and I have never sold any. I'm not buying now, but I am waiting to buy some more gold and silver. When the next crisis comes, the price in gold and silver are going to go very, very high because the crisis is going to be so bad. And you're Indian. You know better than most, and I've learned a lot from India. You know more about silver, and you know more about gold than anybody in the world. So I have learned from you. Thank you.
Thank you. Thank you, Jim, for your time today. We hope to see you soon.
Very good. I'd love to see you in India, and we'll all go and buy some gold and silver together. Okay?
Thank you. Thank you.
Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.